we have a really cool guest named Daniel Hogan. He's the founder of Bookkeeping for Painters. Some of you guys may know him. He's a huge authority in understanding your taxes and number for contractors. And uh, Daniel, I assume that you specialize in painting, but a lot of what you do probably applies to other contractors too, right? I mean, there's a lot of crossover.
For sure, yeah. There's definitely crossover. I definitely feel more comfortable talking about painting businesses just because that's we work with like 160 plus painting businesses, so I definitely know that. We work with a few closely related trades,
Mm-hmm.
like pressure washing and um, things like that. But and there's definitely crossover.
Yeah, for sure.
For sure.
Well, cool, man. To start it up, I think some of these people know who I am. I'm the founder of Local Growth Academy, and my agency is Search It Grow. And I help contractors grow using like marketing and growth systems. My focus is on, helping my clients get new customers. Your focus is completely opposite, though. It's on the finance side and the number side. And I think we have in common, we're both a little bit data geeks, but why don't you just introduce yourself and just tell us like what you specialize in and stuff like that.
Yeah, absolutely. Daniel Hogan, founder of Bookkeeping for Painters, started in 2016. Right now, we work with about 160 painting businesses across the U.S. and Canada. We help folks know their numbers and what they mean, help them save big in tax, and we also help them streamline and automate their system so that they can get information out of their business to make better decisions to get their business to the next level.
For sure. So, I mean, help me understand what you mean by knowing your numbers, because I think a lot of people may interpret knowing your numbers a little bit differently. Specific for what you're talking about, what does that mean by knowing your numbers? What are some common numbers or area of focus that you might talk about and help clients with?
Yeah, I think a big part of that is your margins, understanding what your margins should be. And it's also related to pricing. Make sure you're pricing appropriately so that your margins are there. And it's kind of the biggest, probably the number one problem, especially when smaller, like a painting business that's under 500,000 in revenue, when they come to us, they're more often than not the issues that they're undercharging.
And I say that. Yeah.
So helping them understand like what they should be hitting in their gross profit margin, which a gross profit margin is, just to define that, is what's left over after you pay for direct labor and direct material. So job site labor, job site.
Sometimes some accounting term for that, and correct me if I'm wrong, but COGS, cost of goods sold, that's like the tax term, right? Like the accounting term that goes with that. That's like the direct cost for doing the job. Is that right?
Right. Yeah. So if you hear someone say COGS, they're basically saying direct.
So like in a painting business, like COGS is going to be the labor cost. It's probably going to be the paint itself, supplies, materials, expendables, all that kind of gas, things like that, right?
Yeah. So when I say generally when I talk about gross profit margin, the paint materials and the labor to do the painting on the job site.
Gotcha. Yeah, and so and everything outside of that would fall under like overhead and admin and finance and marketing and other areas of your business, right?
Right. That would be all below gross profit. So
below line, above the line, below the line kind of thing.
Exactly.
Yeah. So we talked a little bit before we jumped on this, and one of the things that I thought was really cool and excited me about wanting to have this chat is, like you said, you had some industry benchmarks, and I'm huge in that. So I have worked with hundreds of contractors. And I don't have 160 paint clients, but I have high double digits. And what's cool is like I do a lot of Google ads and stuff like that. And so what's neat is like I can see something that's happening in Miami and then Dallas, Texas, and Atlanta. And so there's some individuality for sure, but I also see giant trends in data. And I know that's what you're talking about too. And you said you had like industry benchmarks. Can you speak on that a little bit and like how that might help people to understand what you see in benchmarks and where they should be?
Yeah, absolutely. So to talk about margin, so we started with that, typically for your gross profit margin, the average painting business hits about 40% gross profit margin. So to say it another way, if you had a $10,000 project, that means that your direct materials and labor cost you $6,000, and that left you with $4,000 at the end of it. So that would be a 40% or $4,000 gross profit margin.
Okay.
So that's the average. But hopefully folks listening to this are not shooting for just average. So we track internal benchmarking to see who's like in the top, 15%. So we do percentiles to see where folks.
So you like bracket the performance of painters, and then you do benchmarks within that as well as the aggregate?
Right. Yeah. So we have three different buckets: the 0 to 500,000 revenue group,
Mhm.
the 500,000 to 1 million, and the 1 million and over group. And so the folks that are in the top 15% for gross profit margin, they're around 55% gross profit margin.
So slightly over 2x, or then really, just a touch.
Yeah.
Yeah.
Yeah. So we usually recommend, if you're just getting started, you're under 500,000, we usually recommend to shoot for at least hit 50% gross profit margin, which is basically 100% markup.
That's the advice that I've always
materials.
heard. Like, generally speaking, everyone's like, okay, if the job costs you $1,000, you should be charging two. You know what I
Right.
mean? Yeah. Yeah.
Yeah, exactly. Now you can get better than that. There's folks, especially as you get larger, you can usually command higher prices because you have more Google reviews. You're more
and,
established.
and that's an area that you and I cross over, because like one of the things that I try to do is try to teach people marketing tactics to be able to raise their pricing. So like, if you got to paint two different paint businesses, like one really small company and their whole marketing campaign is like handwritten signs on the side of the road, they definitely can't command top prices, and then you
Right.
get another guy that's got like a good website, maybe they got some video, they got a good social media presence, their reviews online are really great. When they go out and do a sales process, it's like really, it's done well. They follow up, they're on time, they're professionally wear good shirts, they probably got branding on their truck. And there's a completely different than like the beat up truck with the sign on the road, or the guy that like is just like goes and does a job, gives you a quote, and like, and then wonders why they can't make any profit. You know what I mean? So I think
Yeah.
these two things that go hand in hand a little bit.
Yeah, absolutely. Yeah, having a strong sales process, you can command uh, higher prices, and usually it's the larger businesses, but it doesn't mean that you have to be a larger business to command higher prices. It's just the larger businesses have usually figured it out. And
Yeah.
so,
Well, some of the things that I see is like a lot of the smaller businesses I work with, they struggle to raise their prices because they're not doing. It's almost like a chicken and egg thing, because they're like, they can't raise the prices because they're not doing good enough marketing, but they're not doing good enough marketing because they don't have enough prices. So from your perspective, if someone's stuck in that loop, they're not making enough money and they don't have enough margins to be able to reinvest in some of the marketing and sales and other growth things that might make them be able to, take the same job and charge 1,000, be able to charge 15 or 2,000, what would that person do?
it really, I would recommend, it's kind of like, do you want to be really busy and not make any money, or do you want to be less busy and then at least make some money?
Yeah. Yeah. For me, I'd rather be less busy and make some money personally.
Right.
Yeah.
Yeah. I think most people hopefully would say that. So I recommend, like, look at your pricing, uh, production rates. If you don't know what those are, definitely take a look at that, which is basically just, figuring out how long does it take to paint each type of surface. And so
Mhm.
the PCA has some recommended production rates. Some softwares like Paint Scout have production rates built into the
Drip
software.
Jobs just did too. Drip
Yeah.
Jobs, like a few months ago, they did it, and they got a bunch of training on it. I think it's fantastic.
Yeah.
Um, well, back to benchmarks. We talk about gross profit margins, but I know that you talk about other things, like you have benchmarks on like what the average person spends on marketing, what the average person spends for labor, and these other things. Is there any other like really important benchmarks you'd want people to know and walk away with?
Yeah. So we talked about gross profit margin. That's a big one. The next big one is like, in the probably a very common question I get is, how much should I be making in my business?
Oh, yeah, yeah, yeah. How much do they should pay themselves?
Yeah. And so to answer how much should you be making, my question to you, or to the person asking, would be, what do you do in the business? Now, when you're getting started, you're probably doing everything. You're probably the salesperson, the production manager. You may even still be painting on the job site. You're also, managing the company overall. So each of those positions should have um, you should be getting paid for each of those positions basically. And you should have the margins built in for that. Not only so you're getting paid, but also so that you can grow. Because if you don't have the margins built in, you won't be able to hire people on to take those positions over and help you grow to the next level. So so to go through, let's say that you're doing $500,000 a year. You have crews that you're paying on the job site. Those crews should be getting about 35%, or let's say you're shooting for a 50% gross profit margin. So the crews should get about 35% of the job. So that $10,000 project we talked about, they should get 3,500 of that
Okay.
paid through as a check or through payroll, whatever.
Mm-hmm.
And so that leaves another $1,500 or 15% for materials.
That's the paint and prep and
Right.
tape and all the other stuff that goes along with it. Yeah.
Right. So that leaves 50% gross profit margin. And then for your roles, let's say you're doing the sales, you booked, closed the job, and you were the production manager. You ordered the paint, you scheduled the project, you got the customers colors, you did the final walk around, collected the check. You're the production manager. So you salesperson, the production manager, and the business owner. So as the business owner, you should shoot to as the business owner, just to define that, you own the business, but you don't necessarily have to work in a business because you could own a business and it could be, you could have a team running it.
Yeah.
So if you're completely passive in that business, we should shoot for 15%.
Okay.
Of
So
the
like the
revenue
owner's
portion.
equity side, like to the passive investor, like I spend, X amount of dollars and buy a paint business, but I don't do anything in it. I should be making 15%.
Yeah.
Okay.
15%, that should be the target. So that's 15%. Then let's say you're doing the sales, you should be getting paid about 10% of whatever you close.
Okay.
So that gets us to 25. 15 plus 10 is 25%. Now, if you're also doing production management, you should be getting around 5 to 7.5% of whatever you produce. So to keep the number simple, we'll say 5. So that tells us that if you're the business owner, you're doing sales, and you're doing production management, you should be getting like 30%
Okay.
of revenue to you as the owner slash salesperson slash production manager. Now, if you're also on the job site, you're like one man show, you would add 35%. So if you closed the work, you produced it, you also painted the house yourself, you should be getting, and you're the business owner, you should be getting 65%.
Yeah. I mean, I see a lot of people in paint contracting business and other business I've run across that don't understand those different definitions. And I think one of the biggest things, and I know there's a tax delineation for this, especially like when you get into like S Corp and some other like tax strategy stuff, there's a very clear IRS definition between like someone that works in the business and someone that owns the business, like payroll versus owner's withdrawals or whatever you want to call that, and I commonly see people that like, they don't charge anything. They'll run the thing so they can make money, but they're not charging per role like you just broke down. That's like really helpful. Like if you're like, okay, well the guy running the brush should make this, the guy selling the job should make this, the guy producing the job should make this, the salesperson should make this, the marketer should make then. And then at that point, if you do all those, then okay, you take all that. But if you only do 2 or 3 of those, that gives you a baseline.
Mm-hmm.
That's awesome. What do you commonly see in marketing as your numbers? Is it like what I hear might be different than what you hear? I'm really curious.
Yeah, absolutely. Just the average painting business doesn't really spend much on marketing. They tend to, so if you look at the industry averages, like you pull the data from the inch, people are spending probably like 1% or so.
Mm-hmm. Yeah.
The average. But for folks that we work with, they're usually trying to grow their business, and get to the next level. So, the folks we work with are spending between 5 and 15%.
That's actually dead on with what I see.
Yeah.
Exact range. Yeah. I tend to see the people that aren't trying to grow or are just doing like word of mouth only, the same kind of guy that might do the road sign. They're the ones that are spending the 1 or 2%. But the guys that are actively trying to grow their business are typically somewhere 5 to 15%, depending on like where they already are and how fast they're trying to get to the next hump,
Mm-hmm.
Yeah.
Yep. Absolutely. Yep. Yeah. And So we typically, recommend try to shoot for a 10x ROI. So if you spend
Yeah.
$1, try to get $10 closed in
So then,
closed work.
if you think about total client acquisition costs, because client acquisition is like the marketing and then the sales, like both of
Yep.
those things have to be there. So your recommendation and kind of your center point of your benchmarks would be about 20% to a client for both of marketing and
Right.
sales.
Exactly. Yep.
Yeah. So 10x of your marketing, 5x your client acquisition, and you got it.
Mhm.
Cool. That's awesome. Um, Man, I really love that stuff. What about pricing strategies? Like, so, we're talking about like benchmarks, and we have like, I know you said 45% for the margins for the top people, but you really like easy numbers, just shoot for 50%, 10% sales. I think you said 7.5 for the production manager. And then, 10 or so percent for marketing, 15% for the owner. And so if to get to that point, if someone's struggling with enough, like what are some pricing strategies that can help contractors like get to those numbers?
Yeah.
Not talking about the branding side of things. I know like, the businesses that aren't marketing, they're going to struggle to command those right prices. And we mentioned that a second ago. But just from the pricing side and the number side, what are some tips so you can give people to kind of help them get to those right numbers?
Yep. So I think there's many ways to generate it. I think the most reliable that I see, the folks that have really dialed it in, they're using production rates, which I know we just talked about, but
Yeah, yeah, yeah.
which is basically how long does it take to paint any particular surface. Now, once you know how many hours it's going to take your team to produce a project, then it's just some relatively simple math. You take the amount of hours and then you multiply it by your labor rates. So how much do
Mhm.
you pay your folks? But then you also tag on like the burden, which is just like the payroll taxes that you have to pay
Mhm.
and the workers comp. So, even though you might pay your painter $25
It's going to
per
cost you
hour,
as a business owner more than that because all the
right?
other stuff goes in. Yeah, for sure.
Yeah.
Yeah.
So it
So
might
you're
actually,
talking about calculating not just what they get paid, but your total cost of payroll per hour. So
right.
what they get paid plus the federal unemployment, state unemployment, withholdings, work comp, all that other stuff that goes along with being a business owner, taking that total cost as a per hour increment, and then figuring out, okay, well, it takes X amount of hours to do Y amount of walls, and now here's my cost, and that's my production rate. Is that
Right.
it, basically?
Yeah. Right. It's usually for that burden, additional burden is usually an additional 20%. It matters. There's a whole bunch of factors on where that number come from, but around 20%. So if you're
So for
paying,
every $100 you spend, it's really costing you 120.
yeah,
Okay.
basically.
Okay.
So, and then you take that labor rate, let's say it's $30, that fully loaded burden labor rate, $30 an hour, multiply it by how many hours for the project. So if it's 100 hours, it's a $30 per hour labor rate that you have. That's was $3,000. And then you put your markup, which is if you're shooting for 50% gross profit margin, that's 100% markup. So
Yep.
basically double, like you had said, you double it. And you don't just double the labor, you also want to double the materials. Some folks,
Yeah, 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 yeah.
as a common mistake we see is they
Because you
don't,
said labor should be about 35%, and
Mhm.
if you're 2xing, then the materials would be 15%. Is that right?
Yeah.
Yeah.
Yeah. So some common mistake is that they don't put a markup on the materials. And so their gross profit ends up taking a big hit because they didn't put any
Why do
markup
you
on
need,
the materials.
what would you recommend marking up for the materials, and why should they mark up the materials? Because I know plenty of guys that are like, well, I make my money on my labor, and if I spend $1,000 on paint, I'm just going to charge a client $1,000. Why is that a bad idea? Like,
Yeah, I recommend 100% markup on materials because if you want to get a 50% gross profit margin, uh, you have to do 100% markup. So
okay.
even on the materials. Um, yeah, and that's just starting out 50%. 50% gross profit margin is kind of like what you should be shooting for starting out, and it really should grow up. Hopefully, you're getting closer to 60 and 65% as you get larger and bigger.
Okay.
Command can a stronger sales process. Uh, but yeah, 100% markup on labor and materials.
Awesome. Awesome. Um, What about, if someone's got the pricing dialed in and they got these margins, which by the way, side question, do you have like any like a document or cheat sheet or download or anything with all these margin numbers that we could give people? Like, do you have anything like that on like your website or anything?
Yes, I do have one. I do have one. Yes. I will. I'll have to shoot you the link to it if that's all right.
Yeah, yeah, for sure. Yeah, that'd be great. That'd be great. I mean, I would like to see it, and I'm sure there's some other people here watching that would like to see it too. I think that'd be pretty cool
Absolutely.
because I mean, some people might just forget. I like having little cheat sheets for all of my information, just kind of almost like post-its or checklists, just to kind of make it easy to remember.
Yeah,
Um,
absolutely.
so if someone's got those numbers dialed in, that I mean, that's gonna be huge already because like I mean, I know you see it, but I see it too on the marketing side. I see people like struggle with understanding marketing costs, and it's not because they can't afford marketing, it's because they're not pricing to include marketing. You know what I mean? Like if they're just charging too little and they don't have enough money to put back into it. Let's just say someone has those numbers dialed in. After pricing? What's after that
Yeah.
to help them make the most money? I'm assuming
Yeah.
tax stuff, right?
It can be taxes. Sometimes it's cash flow. So like you might, maybe your margins are dialed in, but you're struggling with cash. And so
Mm,
it, it could be, a couple of things. So, for cash flow, what we usually ask is, are you taking a deposit? Um, are you taking money down once you close the work? A lot of folks don't want to take a deposit for some reason. They feel it's unethical or something like that. In California, there is some limitations on how much
yeah, I know
deposit
that
you can take.
California limitation is tough. What is it like? Is it like something like $500 or
It's a thousand.
1%, thousand or 1%, whichever's less? Is that what it is?
It's $1,000 or 10% of the job, whichever is less. Yeah.
Okay, so I was
So
completely off. Right concept, but my numbers were completely off.
yeah, yeah, it's basically nothing. So
Yeah,
the workaround for them is to do progress payments once they start
yeah,
the job. They need to get payment right then at the start of the job. But for everybody else, I'm pretty sure, I'm not a lawyer, but I'm pretty sure everyone else can pretty much charge a deposit that they feel is fair. And so folks we work with are charging between 25 and 50% deposits to to once they close the job. So
hmm
they get, and there's a formula for scaling because if you're trying to grow very quickly, cash is usually an issue because you need to put more money back into the marketing to get the next client,
yeah.
and you also need the cash to pay your team. Uh, so if you're looking to grow very quickly, and you'll need to charge a deposit for sure to do that. But you
Because they
can
might not be
actually.
able to afford the paint to do the job in the first place.
Right.
Yeah.
Exactly. So the formula for that is basically what your customer acquisition cost is, plus your direct labor cost
Ah,
as a percentage of uh, of the sales price. That should give you what you should charge as your deposit if you're trying to scale quickly. So your customer acquisition cost, if that's 15%, and then your direct labor is 35%. 15 plus 35 is
40.
50%.
Oh, yeah,
50%.
50. Yeah, yeah, 50%.
Yeah, so that would be your deposit
Okay.
that you would want to
Um,
take.
and if they can't command 50%, would you recommend people do like progress payments, like 20% now and some midpoint to another 20 to 25% or something to help make that cash flow easier?
Yeah, for sure. I mean, the whole game with cash flow is get paid as quick as you can, and then delay payments to other people as long as you
That's so you
can.
can't, as long as you can. Yeah, yeah,
Yeah,
yeah.
that's
Okay.
yeah, that's the whole game. So
Yeah, especially, I mean, and workers aren't going to stand getting to like you got to pay those guys on time. You got to do that. I know sometimes like paint stores and stuff, like depending on your relationship with them, they'll let you do like net 30 or net 60 on paint supplies. And I know some people that use like credit cards to get an extra net 30 because they're not rolling it forever, but they're just rolling it long enough to get that net 30 cash flow. They
yep,
buy the paint today, but they got maybe another 20 or 30 days before the bill comes out and another like 15 days after that before they actually have to pay that off. And that helps them get cash flow too.
yeah, and that can be huge. I mean, just a week can be huge for you to get paid from your customer. So like you said, and that's why I don't include the materials and the formula for scaling. It's just the customer acquisition costs and direct labor, because you can usually put materials on credit.
On card. Yeah.
Yeah, Sherwin-Williams, put it on your vendor account. That gets you 30 days, and then if you want to extend it even longer, use your business credit card and pay down the balance, and that buys you another 30 days potentially.
Yeah.
So you can get basically interest-free money for up to 60 days.
You know, I mean,
Credit.
I have done that, and I have had clients that I've worked with have done that on the client acquisition side. I mean, my business and your business is a lot different than paint contractors and other contractors' business. Like, I don't have to go buy $1,000 worth of paint. You know, like most of my cost is bottom line is the marketing and sales itself, and then the labor to do the job. So I really have acquisition and labor. And I think you probably are similar. Like, you know, the labor cost is the bulk of what you do. It's the consultation, it's the time. Software that we use is probably pretty cheap. So if, like, I have literally, used credit cards to give cash flow, to pay for marketing and ads to get the clients, and then use the client money to pay back the credit card like right away. Um, it sounds like a kind of similar thing, but just with like paint that you could do, your supplies. Yeah,
Yeah,
I like that.
absolutely.
What about what are the tips, like tax things? What are the challenges you see like with them, that like what would be after that? So if they've got like pricing figured out, and they've got some tips for cash flow, what would be the next step?
Yeah, once you're making money and you're profitable, your biggest expense, if you hit any level of success in your business, is going to be taxes. So you
Mhm.
definitely want to have a plan for taxes. You don't just want to bury your head in the sand a lot. There's a big misconception out there that you know uh, taxes are just something that happens to you, but you can actually impact how much you pay in taxes. So getting a handle on your taxes, there's something called tax planning. You can actually proactively
And
make.
do you do that, Daniel? Do you help
Yeah.
your clients tax plan?
Yes, absolutely. We have a formal tax planning where we sit down with folks a couple times a year to say, okay, how are you doing in your business? Okay, what's your projected tax liability? What
Mhm.
are different strategies we can employ to help reduce that tax liability as close to zero as legally possible? And so the basics here is basically, are you in the right, do you have the right tax status? So
That's
what,
huge. I know a little bit about this. I'm not a tax expert by any means, but I know
yeah,
a little bit about this, and I know tons of people have no freaking clue. This is huge.
yeah, yeah. Once you hit about 60,000 in bottom line profit in the business, you should look into getting taxed as an S corp or electing an S corp tax status,
Yeah. But
because you pay a lot lower amount in self-employment taxes.
mhm.
So excuse me. So that's a one big thing, that if you miss that, you could end up paying several $1,000s or even tens of $1,000s over what you could have paid by just submitting a simple form to the IRS saying, "Hey, I want to be taxed as an S corp."
I've actually had that mistake done for me from a CPA. So I've built and sold several companies, and I had a company that was created, and the year one was way past that $60,000, right? So I mean, year one we're looking at profit margins in the quarter million, and the CPA did not file the S corp, and it cost us about $30,000 in extra taxes from not
Yeah,
filing that one thing.
yeah,
Like, huge, huge implications. And you're right, it's a form. It's one form.
yeah.
Yeah.
So literally one page. It's like it's more than one page, but like the main information is just on one page. It's like
Yeah.
your name and your the name of the business, the EIN, and sign it.
So, so,
But
but your general recommendation is, once someone's making more than $60,000, like, take home, like after all the gross profit plus all the overhead and everything else, so they're taking home 60K. Once they cross that threshold, that's when you would advise them to do that.
I would say that's when you want to consider it. It doesn't make sense in every situation depending on
Oh,
which
okay.
what state you're in and everything. But that's when you at least consider seek professional advice or something,
Okay, gotcha.
to consider electing S corp status.
And
Yes.
so you and other tax professionals would, like, they would know the right questions to ask to make sure that, like, that's being done correctly.
Yes.
Yeah.
Absolutely.
Okay. Um, All right, man, that's a ton of stuff. What trends do you see in painting as far as like finance and numbers go? I'm really curious about that. Like, I see trends in marketing, but I'd love to like get some insight on the trends as far as like numbers and taxes and all these things. Like, where do you see the paint industry going?
It's a good question. um, I think over the last 8 years or so, just there's been a just generally professionalization. I think folks are becoming more growth mindset and more professional uh, overall. I think and so, and then the acumen, like the business acumen, has increased. Um, so and not to say that everyone is
Yeah,
amazing.
yeah,
It's
yeah,
just it's
for
just
sure.
gotten better over the last 8 years. I think just generally, and I think that's due to the information that out there. It's easier to get information on these things. And as far as the numbers, I said that the actual numbers haven't really changed that much. The averages and
Really?
uh,
Like if you like back up 10 years, the recommended gross profit margin, all that stuff about the same?
it's pretty close to the same. I mean, it
Okay.
changes 1 or 2 percentage points.
Oh, okay. But nothing
But
like huge, nothing that you rewrite their business book on or anything.
yeah, it's been pretty close to the same as far as the averages go. Yeah.
Okay. Well, what if Yeah. So, I mean, this is a bunch of really great advice. What would somebody, if someone's struggling with any of these areas, with taxes or numbers or whatever, what would you say that they should do next? I mean, I know they can contact you. Do you have like a website we could drop for them or anything to get in contact with you?
Yeah, if you just want to learn more, I have a podcast, The Profitable Painter. If you want to just get free advice on knowing your numbers, what they mean, saving and taxes,
Hmm.
it's called The Profitable Painter. I mean,
Yeah,
that's
I
a
think
free
I've
resource.
listened to like 2 episodes of that, and it's really good stuff, dude. Really good stuff.
Yeah, I
Yeah,
appreciate it.
yeah.
Um, yeah, and then if you want to get one-on-one help, you definitely go to bookkeepingforpainters.com and
Okay,
schedule a consultation, and we'll definitely help you out there.
cool. That's awesome. Well, as we wrap up, do you have any like final parting advice? I mean, we covered some like really big ticket things, and I know like, we can't get super granular. We can't get specific to like any one person or any one problem. We don't have enough time today for that. But is there any like parting wisdom, anything that you could add that might just help the masses?
I think the biggest thing is knowing your margins. Is when you know your margins, you know your business.
Okay.
So knowing what your gross profit should be and how what you should be paying for material, what you should be paying for labor, what you should be paying an operation or a production manager or salesperson. Once you know all that, all those things, it really helps bring clarity to what your numbers should look like, and then how to move forward and how to grow. So I think that just knowing that can really help you with planning and growing your business.
Yeah, that sounds awesome. So I mean, basically, you're saying like if they don't know their numbers, then if they just did that one thing of like really diving in and understanding the numbers, the gross profit margin, the sales, the marketing, the project manager, all those areas, if they figured that stuff out, that's going to help separate them and raise them up, so to speak.
Yeah, absolutely.
Awesome, awesome. Well, man, Daniel, it was a real pleasure to have you, get to know you a little bit. I'm going to keep checking out your podcast. So I hope you maybe come back on here again at some point in the future. Maybe we talk about another area of finance. It'd be really great. And anyone that wants to get in touch with Daniel or anything, we'll put some links down below. And Daniel, you said you were going to share that like the kind of numbers that we talked about, some sort of document or something with that.
Yes.
Awesome, awesome. So we'll post that here in the link as well. Man, it was great to have you on, and everyone else, we'll see you next time. Hey, if you found this video helpful, please like and subscribe. If you're looking for help growing your contracting business, I invite you to join my free community. In there, we go live with amazing trainings, share resources and downloads, plus you get free help from me and from peers. That link is down below to join, and we'll see you in the next video.